a partnership with JP Morgan, a partnership with State Street, partnerships with BlackRock and MasterCard, and the SEC investigation closed with 0 charges. That's not all. 21 shares ETF filing active, cross-border settlement in under 5 seconds, regulatory licenses across 30 European countries all in place. Except for one thing, the price. The token is down 80% from its peak. Either the market is pricing it wrong, the fundamentals are weaker than they look, or the structure keeps the token stuck regardless of headlines. You'll know which of those 3 it is by the end. Here's the mainstream read on Ondo. RWA is the structural category for crypto's next decade. According to Boston Consulting Group, the tokenized asset market is projected to reach $16 to $18 trillion by the 2030s. Ondo holds the leading position. The regulatory moat is real. The institutional partnerships are real. Since there's no traditional market listing for Ondo equity, buying Ondo is how you express a view on the category leader. All of that is structurally accurate, but here is what doesn't get said alongside it. Ondo Finance, the company holds the broker-dealer license, the ATS license, and the transfer agent license. Ondo Finance, the company, earns the management fees on the platform. But Ondo, the token lets you vote on protocol upgrades. Just vote, that is all. That's the complete utility statement, not an editorial take. The actual tokenomics document. The gap between what the platform does and what the token captures isn't a market misunderstanding that corrects itself. It's a design question with a binary answer. Does the governance ever get economic teeth, or does it stay a voting pass? That structural question is what this video is about.
Zero hair, zero hedge.
Nathan Allman graduated from Brown University in economics and biology, completed his MBA at Stanford, worked at a private credit firm, ran a crypto hedge fund, then joined Goldman Sachs to build crypto infrastructure for institutional clients. His co-founder, Justin Schmidt, was head of digital asset markets at Goldman. They both left in 2021, and leaving Goldman for DeFi was rational. On-chain yields were running double digits. Institutional capital was circling. Ondo's first product was structured liquidity pools. Investors chose their risk profile, allocated capital, collected yield. A working miniature of what institutional DeFi was supposed to become. Then 2022 happened. Terra Luna in May, Three Arrows Capital in June, Celsius in July. The Federal Reserve started hiking rates hard. On-chain yields collapsed because they'd always been built on leverage, and the leverage was gone. The liquidity pools had nothing left to offer. Allman made one decision that separated Ondo from every other project that started hunting for the next narrative. He looked at where actual yield existed instead. The Federal Reserve had just handed every US government bond a guaranteed 5% annual return, real yield, off-chain. In an asset class institutional investors had traded for decades. In January 2023, Ondo launched OUSG, a token backed by US Treasuries. Earn US bond yield on-chain from anywhere on Earth with a blockchain wallet and a stablecoin deposit instead of a US brokerage account, weeks of paperwork, and a residency requirement. The customer they built for wasn't a crypto-native yield farmer. It was the international investor outside the United States who wants access to treasury yield and has no practical route through traditional channels. That market is measured in hundreds of millions of people. The Goldman trained team saw that before the crypto-native builders did. 3 things are happening inside Ondo right now that the token price hasn't reconciled with. All 3 matter. 1, the product stack. Ondo didn't build one product, they built a 3-layer financial stack. First off, we've got OUSG, which we already talked about. Its TVL is currently sitting at $690 million, and that number is just marching higher. Layer 2 is USDY, a yield-bearing token built specifically for non-US investors. Runs on over 10 blockchains: Ethereum, Solana, Sui, Aptos. Multi-chain by design because the customer base is globally distributed and lives outside the US regulatory perimeter. Layer 3 is Ondo Global Markets. This is where the product thesis shifts category entirely. Over 100 US stocks and ETFs, tokenized and tradable on-chain around the clock. Tokenized Apple shares, tokenized S&P 500 exposure, available to anyone with a wallet. According to Ondo Finance's official announcement, global markets crossed $1 billion in TVL in May 2026. The first tokenized equity platform in crypto to hit that number. According to the RWA.XYZ data dashboard, the total tokenized US Treasury market currently sits at $15.33 billion, nearly double the level that gets cited when people reference Ondo's early milestones. The product architecture follows one logic. Start with the safest asset class, US Treasuries. Build the regulatory infrastructure to run it on-chain. Then expand into higher risk assets using the same license frame. Each layer is cheaper to launch than the previous one because the foundation is already built. On a side note, OUSG's $690 million sits inside BlackRock's fund. BlackRock manages $10 trillion. That relationship is structurally significant and commercially modest at the same time, whether it's the early shape of a supply chain that eventually scales or the ceiling of what on-chain finance can realistically pull from traditional asset management management. That question decides more about this token's future than any of the catalysts on the bull case list. Domino 2, the institutional stack. The product stack runs on a licensing architecture that took 3 years to assemble. Competitors can't quickly replicate it because these licenses are granted by regulators based on track record, not purchased off a shelf. The foundation is the team. Allman and Schmidt came from Goldman Sachs. They know exactly what an institutional compliance team needs before any business relationship is possible. That background isn't a credential on a pitch deck. It's the direct reason the following items exist. Oasis Pro acquisition. Ondo purchased a registered financial firm and absorbed its existing licenses. SEC registered broker-dealer, alternative trading system, transfer agent. 3 documents that allow a financial entity to operate legally inside U.S. regulatory structure. Most crypto projects don't have one of them. Ondo absorbed all 3 in a single transaction.
The crown is mine!
From there, a 2-year SEC investigation closed with 0 penalties. 0. 21 shares filed an S1/A with the SEC in February 2026 for a spot Ondo ETF, targeting NASDAQ, currently pre-effective. According to the joint press release from JP Morgan's Kinexys, Ripple, and MasterCard, a cross-border settlement pilot completed May 6, 2026 settled tokenized U.S. Treasuries in under 5 seconds. According to the December 2025 joint announcement from State Street and Galaxy Asset Management, Sweep, a tokenized liquidity fund seeded with $200 million in OUSG, is targeting a 2026 launch on Solana. JP Morgan, MasterCard, State Street, and BlackRock each maintain compliance teams whose explicit function is preventing those firm names from appearing next to projects that don't survive regulatory scrutiny. But when all 4 names show up in Ondo's press releases, it speaks volumes about what that implies. At this point, you've heard 3 legitimate product lines, $3.7 billion in combined platform TVL, the most extensive regulatory licensing in RWA, and institutional relationships with 4 of the largest financial institutions on Earth. Even so, the token hasn't moved. Domino 3, about the token. Ondo is a governance token. Here's exactly what that means in this context. Holders vote on protocol upgrades and fee changes. They don't receive protocol revenue. They don't get a share of the management fees on $3.7 billion in TVL. That revenue goes to Ondo Finance, the Delaware C Corp, not to the on-chain token. The company and the token are separate legal and economic entities. The company is the one being paid. This isn't an oversight. It's the current disclosed intentional design. On top of that, 51% of Ondo's total 10 billion token supply is still locked, with scheduled unlocks running through 2029. The market has front-run previous unlock events both times, double-digit percentage drops each time. The next cliff is known and on the calendar. Honestly, you bought a vote in an infrastructure company you don't have an equity stake in. Wait, I know you are confused. I've spent 7 minutes explaining why Ondo Finance is a well-built infrastructure company and why the token that governs it doesn't currently capture any of the value that infrastructure generates. That gap exists for a specific reason. The reason isn't irrational. There are 3 things that would have to happen, not might happen, would have to happen, for the structure to change in a way that forces a repricing. Those 3 things are specific, and they tell you more about this token's future than the entire institutional partnership list combined. Trigger 1, the fee switch passes. A governance proposal routing a portion of Ondo Finance's platform transaction fees to Ondo token holders must pass. Alternatively, a token burn would also work well. Not all fees, as a portion. That single vote converts Ondo from a pure voting mechanism into a yield-bearing on-chain asset. Every fundamental valuation model for the token gets rebuilt the day it passes. The infrastructure company becomes something token holders partially own, instead of something token holders partially govern. The vote hasn't happened. When it does, or when governance makes clear it won't, the token's structural valuation is resolved either way. Trigger 2, ETF gets approved. 21 shares with the SEC in February 2026 for a spot on ETF, NASDAQ listing, currently pre-effective. Approval creates a regulated capital pipeline. No crypto wallet required, no exchange account, no awareness of the unlock calendar. Every spot crypto ETF approved in the current regulatory cycle launched with measurable inflows from capital that previously had no access to the token at all. Trigger 3, Ondo Global Markets reaches regulatory certainty. If the SEC provides explicit regulatory clarity on tokenized U.S. equities, and Ondo holds the position as the licensed, operating platform at scale, the addressable market expands well beyond treasuries. Treasuries, a $26 trillion market. U.S. equities, $50 trillion. Ondo is currently operating in the smaller one. None of those are guaranteed. All 3 are binary. 2 of 3 happening changes the structural design. 0 of 3 means the platform scales and the token keeps pricing in governance optionality only. That is Ondo, the actual unhyped version, just like my head. Look, this channel is called ZHZH for a reason. Zero hair, zero hedging. I've got 0 hair to lose, and I don't have the time to hedge my bets to make you feel better. But hey, if enough of you actually hit that subscribe button, who knows? Maybe a single strand of hair miraculously pops up on this smooth head. So smash subscribe, and let's see if we can cure male pattern baldness through market analysis. See you next time.